All right. Thank you. Thank you. Thank you. Thank you. So I haven't posted the pictures yet, but I went downtown in New York City last night or, last evening. I haven't been there in years, but it was kind of cool to walk around. I checked out Alexander Hamilton's grave, the New York Stock Exchange, had a good time, met some cool people. But you don't really want to care about hear about that, do you? Well, I know you do, but anyway. And I can't get my camera working, so you don't get to see my beautiful face tonight. You could just hear my beautiful voice. Just kidding about that too. All right. So anyway, the biggest news of the day was this crowd strike. I mean, there's some kind of global outage caused by their software. Probably, I don't know. Maybe it's some incompetence, some incompetent engineer somewhere. But forget the news. Let's just think about the market principles. We always hear a stock market jobber talk about price levels. Okay. We always do. Why? Because they're so freaking important if you want to be a great trader. Or not even a great trader, a successful trader. So CrowdStrike went into this massive move lower where to find support, right? Right there was support there, was support there. This particular stock was, and it was resistance there. This particular stock, it's an important level. So check out my other video on crowd. But right now, I just want to check out what happened in the markets today. All right, so this is kind of important. We're going to go through SPY. So this is kind of important. So SPY broke its uptrend. Now, a lot of beginner traders, they don't really understand the concept of the trend line, and I can understand why. Right? It's an art and not a science. But just think about this. Pretend this was the old days, and you are at when the market closed, you're writing the action on the chart down. All right, a market's going up. What's the first thing it's going to do before it goes down? It's going to stop going up. Okay. So if you're recording the chart action, it's going to cross that trend line. It's just a graphical illustration. It's nothing more than that. It's like a wake up call. It's like, hey, 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 I'm the market. I'm telling you, get ready. We're going through a change here. And over the last few days, we have broken our uptrend. So what does this mean in terms of supply and demand and market equilibrium? Well, there wasn't enough supply. So the demand, meaning the buyers, had to pay up, and all of a sudden the demand or the buyers had all their orders filled, and now the sellers are like, damn, I can't find any one to buy for me. Like when the market's going up, the buyers are saying like, damn, I can't find anyone to sell to me. When the markets are going down, the sellers are like, damn, I can't find anyone to buy for me. So it looks like the red team could be taken over. Let's just do a quick look at some of the sectors here. First thing we're going to check, which we typically do, is the tech sector. Wow, that's some negative action there. Now, people say to me like, "Oh, is this because of the election? Is this because of Biden? He's going to, get tossed out, probably and hopefully." Um, I have no idea, man. I'm not that smart. I don't think the vast majority of institutional traders trade upon the news. They don't. Institutional traders have strategies. They develop. They stick to them. I think this is really just, frankly, this is what happens. Markets go up and they go down. I mean, look at this. The market went up here. We had a big sell off here. I don't even know what was. I don't even remember what was going on there. What did the media blame that on? Oh, and here's an interesting thing here. Notice how you find support at a level that was resistance. Same thing here. Oh wow, what a great technical analysis lesson this is. So there are people who sold here who thought they were, the kings when the market went lower, but finally it goes higher, and they're like, should have not sold. If it gets back to my level, I'm going to buy my shares back. So remorseful sellers from here, placing buy orders here, create support. You can see the same thing here. Remorseful sellers placing sell orders here, place buy orders here. So that leads me to think that, okay, the same thing is going to happen again. Remorseful sellers here around 217. I know it doesn't seem like a lot because it's only 3 or 4 points away, but we're talking about a sector. We're not talking about a stock. So that's a big move. So I think the market ultimately goes lower, but there's probably going to be a good chance we get a bounce here in the tech sector if we get down to there. The other two sectors that are really in play are healthcare. Oh man, that's a nastier. Now, look at this. This is the same principle we just saw. Price levels that were resistance can become support. It's not a coincidence, right, that the sell off in healthcare found support around this price level, like 147, 148. It was resistance. Some price levels in the market are more important than others. And if you don't get that through your thick head, like my grandmother used to say, you're never going to figure this stuff out. Wow, look at this reversal in financials. Really good chance we're going to find some support here. Maybe you get a bounce. But I'm not like super bullish on this bounce because the market's going down and it's very hard to trade counter trend, meaning you buy when the market's going down or you sell when the market's going up. Counter trend trading is very difficult. You're almost better off. Well, I think you're definitely better off staying on the sidelines until the support stuff starts breaking, things start trending lower, and then get on the short side. I mean, to trade counter trend is difficult. It's the mirror image or the opposite of if the market is going up and is very bullish, it's hard to take a short position. So we got some very clear levels here to look at. All right, I'm just going to go through a couple of these other things here. Ooh, false breakout in industrials. A false breakout is when it looks like something is going to get above a resistance level, but that conversion never happens. Those resistance level never turn into support. Well, not never, but you know what I'm saying, right? So, like right here, we got this massive move higher, panic buying. All these people now are like kicking themselves in the, you know what, because it's like, damn, why did I pay up? But we had this huge move higher. We come down, and what was resistance to not become support? This is what we call a false breakout. There's a good chance this keeps going lower. Okay, what else? The consumer discretionary. Wow, this looks weak too. Man, this market is really like freaking melting down here. And it's not surprising. I mean, you know, markets don't go up forever. All right, there's our communication services. Just going to take a quick look at some of the big boys here, whatever, like the big boy speech. NVIDIA. Oh, here's an interesting thing on NVIDIA, which leads me to think that this is negative. This is what we call a lower high. Markets go in peaks and valleys. All right. And when the peak is at a lower level than the prior peak, we call that a lower high. That tells us that what? Over this time period, the sellers have become more aggressive. They're willing to accept lower prices. At the same time, you got the support level down here where the buyers are holding their own. You know, they're like hanging out. So think about this. You got passive, complacent buyers willing to hang out. You got sellers who are really aggressive. Aggressive sellers, complacent buyers sets the stage for move lower in any market. It's not just stocks or cryptos or whatever. All right, everybody. If you have any questions, make sure you hit me up, marketstockmarket.jobber.com, or hit me up here on YouTube. And yeah, I will see you soon, hopefully. I mean, these are good markets for traders. They really are. Maybe not for investors.